Hello everyone. It's Amber Carlton with Berkshire Hathaway HomeServices Premier Properties, and I'm coming to you today for episode 28 of Real Estate Basics. And today is going to be a pretty quick little segment. I just want to get some clarification out there between market value and tax assessed value. In trying to come up with content for you guys, I Googled what some of the top real estate questions are. And one of the number one things was, what is the difference between assessed value and market value? So when you're thinking of assessed value or your tax assessed value, that is going to be what the city or county auditor puts for a value on your home to base your taxes off of. In our market, largely, that is usually low compared to the market value, which market value means the amount that we could sell your home for. And that's how you would want it to be too, right? You don't want your home to be assessed and you're paying taxes based off of a value that is higher than what you could even sell your home for. In very rare instances, sometimes that does happen. Usually when it happens, the city or the county has been behind on getting their assessments updated, and they come through and they kind of jump everything up quite a bit, and then they won't do any increases for, let's say, another 8 years, and by that time you're way under assessed, and it's kind of a vicious cycle. But we do see that from time to time. If you believe that your home is assessed for way more than what it's worth, you can contact them, the county or the city, whoever that's through, and ask them to reconsider. They're going to want to tour the inside of your home in order to do so. And when they send out those notices, you guys, saying, we're going to be redoing our assessments, can we take 5 minutes to come in and look at your home? They really are in and out super quick. And it's very helpful to them. So if your home isn't upgraded to the max, if you didn't finish a basement and not mention it somewhere, it's good to let them in. Then they actually know what you have, and they're not making assumptions that for that neighborhood you have stone counters and all of these things that you might not have. So really, working with the county, working with the city is the better thing to do 9 times out of 10 there, unless, once again, you've totally updated a bunch of stuff and maybe you don't want that to be shown. That it's ultimately your decision, but usually it doesn't hurt to let them in. For market value, we sit down, we look at different homes that have closed that are the same style, meaning 2-story if you have a 2-story, rambler, or a 1-story if you have a 1-story, bi-level or split level if it's of that nature. It needs to be a similar style. And within a certain radius if we can. Sometimes we have to go a little bit further out to get better comparables. Yeah, so that's how we come up with your range of market value. And the actual market value is the price that a buyer is willing to pay for your property. That we can't detail into the exact number until you're actually listed and you've got a buyer. But we can give you a decent range in which it should sell for on the low end and on the high end, and then it's up to you to make those decisions from there. So hopefully that gives you a better understanding of what the county assessed or city assessed tax value is on your property versus what the market value is. We are always going to want the market value to be higher than the tax assessed value. One brings you in money, the other one you're paying out some dollars based on. Overall, they're both great because they mean that you've got a property that has good value to it. So I hope that was helpful. If you have any questions, don't ever hesitate to reach out to me. Please let me know what you would like to hear about next month. Anything real estate related would be amazing, because I am starting to wonder, what do you guys want to hear about? So let me know, okay? I hope you all have a great weekend. Take care.